Hello and welcome to a post-election edition of the Finance Quarter, coming to you today from the Sydney electorate of Greenway, but more on that in a moment. As we all know, one of the biggest issues in the election campaign was the federal budget, with both sides promising to bring the budget back to surplus. Well, the time for election slogans is over, and it's Tony Abbott who has to deliver on that promise, but can he? I put that question to Urbis Chief Economist Nikki Hutley. Nikki Hutley, now that the election is over, do you think we're going to see some honesty around budget discussions from our politicians?
Well, I certainly hope so, Andrew, and I think the political factors that were driving the rhetoric that we have heard have now obviously dissipated, and so we can be honest, and there's no need to indulge in anything else.
Because the politicians bang on about getting the budget back into surplus, which is a laudable goal, but the bottom line is a surplus budget isn't by definition a good budget, just as a deficit budget isn't by definition a bad budget, is it?
No, that's absolutely right. And in fact, for governments to run endless surpluses is a misuse of funds. As most Conservatives themselves would tell you, having the government spend your money is less efficient most times than the private sector. So why you'd want to have endless surpluses is a good question in itself. Obviously, we do want to pay down debt over time, though. So running a surplus over the cycle, or balanced budget over the cycle, where you have some years of surplus, some years of deficit, is the most sensible fiscal policy that you can have.
Nikki, the coalition government is promising to bring the budget back to surplus in the 2016-17 financial year. They're also promising a surplus of 1% of GDP within a decade. What are your thoughts on that?
To me, it's about the means rather than the end. So what is it that we're cutting along the way to get to the surplus? What are the broader economic circumstances, both globally and domestically, that suggest that we need to have more relaxed fiscal policy and to perhaps run deficits for a little bit longer? So having a blank target by a particular date in and of itself, I don't believe is good fiscal policy. I think what you need to do is adapt to the times and say, for example, we will have a balanced budget over the cycle. We will aim to reduce debt over a period. Picking a number and a year restricts you too much to say that you can't respond to changing economic conditions as and when the economy requires.
Well, Tony Abbott said on budget night that he wants to have a meaningful surplus. So what do you take meaningful to mean?
Well, you know, what does that mean? It's a bit of political rhetoric again, but I suspect that what he means is that we will actually have a surplus that is sustainable over time, that perhaps focuses on the long-term needs of an ageing population, which neither side of politics has addressed as yet, and we know is a growing problem for us, looming on the horizon. So one that will help us to pay down some of the debt that's built up slowly and sensibly, and that allows us to get our fiscal house in order as and when the local conditions say that it's sensible to do so.
Because I'm sure our viewers hear a lot of this debate about surplus, deficit and so on, and it just washes over people's heads. But to the man and woman on the street, what does it actually mean for their lives when the budget is in deficit or surplus and things like that?
Andrew, that's a bit like asking John Hewson about the GST impact on a cake. There's no simple answer, unfortunately. But think about it as if we decide to run a deficit for longer, that means that there's a more generous program out there of support. So, for example, the paid maternity leave scheme that's going to be coming in puts budget pressure for longer, but it means that a lot of people that otherwise might not have been able to afford to have a child can actually take some time off work if they do so. So there are swings and roundabouts for some people. In terms of what it means for the broader economy, more government spending a deficit for longer is stimulatory to helps the economy grow, and that is better, means more jobs for more people. It also means that interest rates are possibly likely to be a little bit higher, so in terms of your mortgage. So there's lots of swings and roundabouts, and as I said, there's no simple answer, but the most important thing that people need to know at the moment is that when the economy is fragile, as it has been for a while, if you pull the strings too quickly on fiscal policy, if you cut government spending too quickly, you will end up having lower growth and higher unemployment.
So the government, from what you've said, has a lot to think about before it carries on with the rhetoric that it was telling us before the election.
Oh, I think that's absolutely right, and I don't think you'd find too many economists in Australia who haven't said the same thing for quite a prolonged period of time. You know, budget surpluses in and of themselves should never be an objective for government policy. Steering the economy to optimal levels of growth, employment and inflation is what they should be focusing on, and fiscal policy should be set with that objective in mind.
Well, Nikki Hutley, you've given our viewers a lot to digest and our politicians a lot to think about. Thank you very much for your time.
Thanks, Andrew.
Now, while Tony Abbott is promising to balance the budget, he's also promising to slash red tape for small business. It's a promise opposition leaders always seem to make in the run-up to an election. The reason we're here in Greenway is that I've been asking small business owners in this electorate what they think of that promise, and I've discovered there's a large amount of scepticism.
It's the usual pre-election rhetoric. He'll probably slash jobs, but red tape, I don't see how he can. What's he going to do? Shut down occupational health and safety? What? How's he going to do it?
The only time we seem to hear this is election time. You know, for the next 3 to 4 years or whatever term is. I think Kevin Rudd's probably said the same thing previously, and nothing's happened.
I just think to myself, I'd like to have a few more details on what red tape he can slash. I mean, there certainly is some, of no doubt, but no one's been specific on it from either side.
Another of Tony Abbott's election promises, as we all know, is to axe the carbon tax. But just like his promise on small business red tape, many of the small business owners I spoke to here in Greenway, such as the owner of this IT business, wonder if there'll be any benefits for them.
In reality, the dollar value of that is so small compared to the running costs of a business. I mean, sure, it will have some impact, but it would be, if it's less than a few $1,000s a year, then it's really of no material impact. It's the same as reducing the company tax. It sounds like a great idea, but if you're in small business, the chances are the amount of money that actually represents is very small.
You may remember in the lead up to the election there was a kerfuffle over the Coalition's planned Paid Parental Leave scheme because of the impact it will have on income sourced from dividends. That's because the planned cuts to the company tax rate will lower the franking credits paid on company profits. Well, the Coalition's been elected, so I thought we better get to the bottom of this, and I spoke with independent financial advisor Suzanne Haddan. Suzanne, the popular perception is that the Coalition government, or now Coalition government, Paid Parental Leave scheme is going to have a negative impact on people who live off dividend income. But you have a different view. Why is that?
Well, the raw numbers would suggest there would be a drop in overall earnings as a franking credit would reduce. But I think we've got to look more broadly about what effect on dividends and other buyback issues might come out of this change. And I remember in the 2000-2001 year when the tax rate was changed for companies, we saw a lot of very tax-effective buybacks offered to share investors. And what that means is they use their franking account to buy back your shares, and a reasonable portion of the buyback is fully franked, which is very advantageous for those on low tax rates. So it'll be interesting to see what tax-effective off-market buybacks we get offered through this process.
Now, on the issue of superannuation, with the new Coalition government, there are going to be changes. And one of the things they've said they're going to do is scrap the low-income tax rebate for super and reinstitute the super co-contribution to its former levels. I mean, what do you think of measures like that?
Well, I understand that we have to make sure that we're responsible with how we address incentives in superannuation. The low-income superannuation $500 maximum actually was only coming in this year, so sort of now you see it, now you don't. So it was for people under 37,000. But I found the co-contribution worked very effectively, and it was very disappointing to see that reduced from $1,500 to $1,000 to $500. I know for our working clients on lower incomes, young people, that was quite a costly change for them. So if they can raise that when we're in a strong surplus, we'd be very happy.
And the perennial chestnut with superannuation is the contribution caps for tax-free contributions and after-tax contributions, and the government is going to review those. Is that a good thing?
I think superannuation has its own disincentives. It has disincentives because there's legislative risk, your money's tied up, so you can't withdraw it if you decide to go on a holiday or a home. Why would you have disincentives for people to put in their money in superannuation, lock it up for a long-term perspective for ready for retirement? So I never quite agreed with giving a disincentive to saving. So if they can review those contribution caps so that we can put decent amounts into superannuation, so people are encouraged to build their retirement savings, which from all the modelling, so many surveys and results come out that we're not going to have enough in retirement. I just don't agree with having a disincentive. But more importantly, what I find very difficult is that all the changes particularly when they're negative, create the environment where people have no confidence in the superannuation system. So when you're trying to write a strategy to help people over 5-10 years, you write it in the knowledge that the rules continually change. So let's set them right and let's stay with them. Let's not fiddle with them each time a surplus needs to be adjusted or the deficit.
But one thing I'm sure you'd like to see fiddled with is the penalties for people who accidentally exceed their contribution caps, and so it can be up to 93% tax on what you've exceeded it by. This government has indicated it will look at that. The former government had started to ease those draconian penalties. What should the coalition be doing there?
The penalties are so disproportionate to the event, and many people exceeding these non-concessional caps, the tax-free money going in, do so with a genuine mistake. And to be penalised 93% to me is quite ridiculous. And the tax office has no room to move because the legislation doesn't enable it. Yes, the previous government started the process, but I have to say when I saw the legislation which enables you to effectively pay marginal tax rate on any excess contributions, I just shook my head and thought, why didn't you deal with the disproportionate penalty for the non-concessional contribution cap?
Which is the after-tax contribution.
Which is the after-tax contributions. Because I have seen cases just by someone inadvertently putting that extra $1,000 in a year, triggering their bring forward rule, forgetting about it, and being handed bills of $30,000, $40,000, $50,000 for no mischief. No trying to rort the system, just a genuine mistake. And our hands are tied as to how we can help those people, and it's very disappointing and sad.
Sounds like the government has a lot of work to do, even though we don't want to see much change. Suzanne Haddan, thank you very much for your time.
Thanks, Andrew.
Well, that's all for this post-election edition of the Finance Quarter from the Sydney electorate of Greenway. As always, if you'd like to see any part of the program again, you can find us on the ABC News website. Just go to the business page and click on the Finance Quarter icon. We're also on Twitter at the address on your screen now. Thank you for watching, and we'll see you next time on the Finance Quarter.